Hi, this is Matthew Cratter from Trader University, and today I want to answer the question, is Bitcoin a pyramid or Ponzi scheme? If you're interested in Bitcoin, crypto, momentum stocks, or just want to see what I'm trading these days, be sure to hit that subscribe button. So one of the critiques I get a lot when I talk about Bitcoin on my YouTube channel is that it's manipulated, that it's a pyramid scheme, that it's a Ponzi scheme. So I wanted to address that in this video. The name Ponzi scheme comes from Charles Ponzi, who was an Italian-American swindler who gives his name to the Ponzi scheme. And his swindle is very similar and provide the structure for later Ponzi schemes. And this is normally where you promise clients a certain percentage profit, usually a very high profit. In this case, 50% profit within 45 days or 100% profit within 90 days. Now, the way these work is that the later investors in a Ponzi scheme are paid off with new money from new investors. So let's just quickly go through, talk about Ponzi versus pyramid. So as I said, in a Ponzi scheme, you pay investors, you pay profits to early investors with later investors' money. So Bernard Madoff, the Madoff investment scandal is a great example of this. This sort of came unwound during the last financial crisis of 2008. This is one of the biggest, I think it may be the biggest Ponzi scheme in history, multi-billions of dollars. And what Madoff did is he basically promised investors, and a lot of these investors were very smart, wealthy people, institutional investors. He still managed to fool them. He promised them very high returns. And what people liked about his returns, I can't remember what they were, 15, 20% a year or so. Not super crazy. But he never had drawdowns. The returns were very, very constant. And the way he was able to do this is he was able to pay out almost like a dividend or a capital gain to early people using money from new investors. And eventually this thing collapsed. So that's a Ponzi scheme. There's no real economic value being created. You're just shuffling money around. And the other thing about a Ponzi scheme is you need to keep adding more people all the time or it collapses. You need those new investors to pay off the new investors. And another characteristic of a Ponzi scheme is that value and investment returns. In other words, the pricing of the security or of the returns, it's all determined by a centralized entity. So that's a Ponzi scheme. Obviously a criminal enterprise in the US and most countries. Pyramid scheme is often confused with a Ponzi scheme, but it's slightly different. In this case, it's more of a recruitment scheme. So you get paid usually by a centralized entity, a founder or a corporation. You get paid for recruiting more people rather than selling an actual product. Now, there may be an actual product involved, but you know you're in a pyramid scheme if you get paid based more on how many people you recruit rather than your sales to them. So a legal version of this, though sort of questionable, is what's called multi-level marketing. So multi-level marketing can be okay and it can not be okay. It's best to stay away from these schemes. No one usually makes that much money from them except the people at the top. But in MLM or multi-level marketing, it becomes a pyramid scheme at the point at which your compensation is mainly based on how many people you recruit and then you sell to those people. If you're just selling beauty products door to door and getting paid a commission, it's probably not a pyramid scheme. But again, the thing to notice in both of these cases, Ponzi schemes, pyramid schemes, there's always a centralized entity. And there's often the promise of very high returns over a short period of time, and you can be explicitly paid for recruiting people. So we talked about Madoff. He's still in jail, I believe. Great example of a Ponzi scheme that fooled a lot of people. Now, these Ponzi schemes often unwind during financial crises. That's when the tide goes out, as Warren Buffett says, and you can see who's been swimming naked. For this financial crisis of 2020, it remains to be seen who the bad actors are. I suspect it's mostly Main Wall Street, and the central banks. So a lot of people, Bitcoin can sound like a pyramid scheme or a Ponzi scheme because a lot of Bitcoiners, myself included, I'm guilty of this on this channel, are often guilty of evangelism, talking people's ears off. If not, I don't encourage people to buy Bitcoin. I just document why I'm buying it. But in this, I think a better analogy than pyramid or Ponzi scheme, and I'm going to go into this in more depth, is the analogy to early iPhone adopters, of which I was one as well. I just couldn't stop talking about it when I got my first iPhone. But I was not telling people about the iPhone because I owned Apple stock, though I did. I was telling people about it because I thought it was really, really cool. And I certainly had no illusion that me telling 10 of my best friends about the iPhone was going to drive up the price of a multi-billion-dollar company like Apple. But often there's this kind of evangelism that surrounds Bitcoin, and that can make people a little bit suspicious. Now, Ponzi schemes will often label themselves as low risk. They'll tell you can make 20% a month, 10% a month, these really huge returns. By contrast, I often mention that on this channel, Bitcoin can definitely go to zero. It can become a failed project. And in fact, I think its ultimate goal is either its ultimate price target is going to be a very high number. If the things that happen that I think are going to happen, it's going to be worth in the millions of dollars per Bitcoin, which I know sounds a little bit crazy. We'll go into that later in this video. But Bitcoin can also go to zero. It's sort of a binary outcome. So, similar to something like Facebook. Facebook was either going to be a complete failure and go to zero, or it was going to take over the complete market for social networks. Now, I want to make it really clear to everyone that I don't get paid by anyone for telling you about Bitcoin. I don't have any sponsors. I don't know what ads YouTube runs on your computer when you watch my videos. I doubt they're crypto or Bitcoin ads. I think YouTube prohibits that. But I'm not paid by anyone. There's no secret cabal of Bitcoin bankers who are paying me. I'm not paid by the hardware wallets that I tell you that I use, like Trezor or Cold Card Wallet. I'm not on anyone's payroll. I'm already independently wealthy, and hopefully going to become even more wealthy due to Bitcoin. And so I'm sort of documenting that journey. And just as when I was telling people about the iPhone in the old days and telling them that I did own Apple stock, I will tell you that I do own as much Bitcoin as I safely can, knowing that it could go to zero. So I don't want to blow up my family's finances by owning it, but I own as much as I conceivably can and still risk it going to zero. A lot of people I talk to, I know, put something like 1 or 2% of their net worth in it, because that way, if it goes up 100x, you've doubled or tripled your net worth. And if it goes to zero, you've lost just 1 to 2%. Again, none of this is investment advice, of course. Now, there are lots of Ponzi schemes in the cryptocurrency universe. And I always make it quite clear on this channel, I'm not interested in any other cryptocurrency at this point, except for Bitcoin. I don't like Ethereum. I don't like Litecoin. I don't like Bitcoin Cash or BSV or some of these forks of Bitcoin. I like Bitcoin, BTC. And as lots of people like to say, Bitcoin is the next Bitcoin. This is where I think you really need to be. Again, non-investment advice, of course. A good example of a Ponzi scheme in the crypto area was BitConnect. BitConnect was running these sort of trading robots, and they were promising 1% daily compounded interest. And again, this was all being calculated in a centralized way, but this did turn out to be a Ponzi scheme. And they had their own token, and it crashed once this became apparent. This is very typical of a Ponzi scheme, where you're being promised very high returns over a certain period of time. So 1% daily compounded becomes a small amount of money, becomes a very, very large amount of money quite quickly. Another example would be this Bitcoin Ponzi scheme. I believe this was actually using Bitcoin. Now, that in itself does not disqualify Bitcoin, because as we remember, Bernard Madoff was running a Ponzi scheme using US dollars. And in fact, all the real illegal activity that takes place worldwide, the vast majority of it is conducted using US dollars. So it's not a really good argument against Bitcoin. Obviously, there is illegal activity done using Bitcoin, just as there's illegal activity done using euros and yen and Australian dollars and Canadian dollars, but especially US dollars. So this is another example. I believe this is from India. gain Bitcoin Ponzi scheme. This was basically, they portrayed themselves as miners, I believe. I didn't read this too closely. And then it morphed into an actual Ponzi scheme where they were paying off later investors with, they're paying off early investors with later investors. And again, it's very typical. It's run by a centralized group, and people are being promised a certain monthly return. If you ever see something like this, you got to just run in the opposite direction. If it seems too good to be true, it normally is. Bitcoin may be the one exception to that, as I'll tell you a little bit later in this video. So this is something to really emphasize. Unlike the Madoff investment scandal, unlike some of these other ones, which I'll talk about, other Ponzi schemes like OneCoin, Bitcoin is not controlled by a central entity. It's not controlled by a central corporation. It doesn't have a charismatic founder like Ethereum does, for example. Bitcoin is completely decentralized. We don't know who the founder is. We don't know if he or she or they is still alive or dead, but it runs on its own. It's a network that runs the Bitcoin software. It's completely decentralized. If you want to see a map of it, I'll link to this. This is all the Bitcoin nodes, all the full nodes around the world. This is also what makes it quite difficult. If, for example, the US government wanted to shut down Bitcoin, how is it going to do that? How is it going to invade all these sovereign countries and go out in the middle of Siberia and tell these people to unplug their Bitcoin nodes, or deep in Africa, or in countries, especially countries that are hostile to the US and are not fans of the hegemony of the US dollar regime. So Bitcoin, unlike some of these other scams, it's completely decentralized. These people may have certain philosophical things in common. They may be somewhat libertarian, for example. They may like free markets, but these people don't all know each other. This is not some global conspiracy. Now, the Bitcoin network software, anyone can download it. It's all open source, completely transparent. You can download it. I can download it. You can actually buy a node and run it in your house, or you can just run it on an old computer. So the software is transparent. It's not controlled by some centralized entity. There are developers who work on it and slowly upgrade it, but everything they do is done completely out in the open and remains open source. Now, Bitcoin, the network, also maintains what you might think of as like a banking ledger. This is what the blockchain is, and it basically shows every Bitcoin transaction that's ever occurred. Buyer, sellers, addresses. And if you're running a full node, you can verify this using cryptography. Anyone can download the Bitcoin software and use it to verify both the blockchain, which is the list of all these transactions, as well as whether the Bitcoin they own is actual Bitcoin. Now, Bitcoin's pricing is not it's not priced in a centralized manner. So there was a Ponzi scheme called OneCoin that you may have heard about. I'm not going to go too much into this, but basically OneCoin had it was backed by a single corporation. There was one in Bulgaria. It had a couple branches run by absolute crooks. One in Bulgaria, one in Dubai, and OneCoin was always priced by this corporation in a sort of mysterious manner, and you could buy and sell it, though you were mostly just encouraged to get your friends to buy more of it. But the pricing was completely non-transparent. It was centralized. It was run by a central corporation, and there was no insight into the pricing. By contrast, Bitcoin is priced worldwide, wherever buyers and sellers meet to conduct business. So this might be on a crypto exchange like Coinbase or Kraken. It might be at one of their over-the-counter desks. I know some of you have been saying that there's secret, nefarious stuff going on at over-the-counter desks. I can assure you that it's impossible to go to one of these OTC desks and buy a lot of Bitcoin at a below market price and then flip it on the market. It just doesn't work that way. Now, there can be discrepancies in pricing of Bitcoin around the world. So there's no centralized exchange for Bitcoin, and this is why you can have weird things happen, especially in countries that have troubled currencies like Venezuela or Zimbabwe. This is an old article from November 2017, which is when Bitcoin was really getting to its last peak. But the price hit 13,000 on a Zimbabwe exchange. At the same time, it was trading at roughly half that price on U.S. exchanges. Now, there's usually an arbitrage here, and so this normally happens only to countries that are fairly difficult to get into. So, for example, North Korea. But what I could do, and you can make quite a bit of money doing this, is I could buy Bitcoin in the U.S. for 6,500, and then go to Zimbabwe electronically and sell it for 13,000 and pocket the spread. And what that does is that will drive down the price of Bitcoin in Zimbabwe. It will drive up the price of Bitcoin in the United States. And so there is this arbitrage that's happening all the time. And that's why it's impossible to find. Maybe you can find someone really dumb on the street who will sell you a Bitcoin for $1,000. There might be that sort of arbitrage, but quite unlikely. And so Bitcoin, it trades at many different prices around the world. All those prices are close to each other, assuming the free flow of capital, because there are these arbitrages where you can buy Bitcoin where it's cheaper and sell it where it's more expensive, and that sort of brings everything in line. When there's a quick market move, things can get out of line, but then the arbitrageurs come in and bring the prices back to roughly where the equilibrium is. Now, right now, Bitcoin is trading around 7,000, 7,100. It might be trading at 6,900 in some exchange in Asia, and 7,400 at some exchange in South America. And there may be capital flow reasons for this, but we know Bitcoin is worth roughly $7,000 per Bitcoin at this point. There's no single group in charge of pricing the coin. So if you ever see a crypto where there's a single group that doesn't price things transparently, like OneCoin, which we talked about, that's a signal that it could be a Ponzi or pyramid scheme. Now, let me just mention briefly, Bitcoin's price can be manipulated over short periods of time. It has a relatively small market cap. Right now, it's about 130 billion, I believe. And so you can come in with a lot of sell orders, and you can try to force the price down, maybe trigger some stops, and try to drive trigger some stop loss levels, try to drive leveraged traders out who are leveraged 10 to 1. So a 10% move in Bitcoin would mean that 100% of their capital gets blown up. They get a margin call. They get liquidated by their exchange, etc. So you can get I would say short-term price manipulation. So if you sell a lot of Bitcoin, if I go in and just keep selling, maybe shorting the futures, I can drive it down for a period of time. But then, of course, if I want to accumulate Bitcoin on that price drop that I've caused, I need to buy a lot, and that will drive the price back up. So it's not as easy as one would think. There's obviously price manipulation that happens all the time with stocks, especially penny stocks and over-the-counter stocks, OTCBB stocks, which is one reason to avoid them. But Bitcoin is it's a completely free market. So we can see things happen like they happened in March, where Bitcoin fell overnight from around 8,000 to below 4,000. Got down to, I think, I call it 3,800, 3,900, maybe lower on some other exchanges. Then you can see what happened is it's sort of normalized and come back to closer to its stock to flow pricing level, which we'll talk about in a minute. So Bitcoin can be manipulated to the extent that it's very volatile. If you come in with billions of dollars, you can move it around. But if, for example, Jeff Bezos wanted to corner the market and buy every Bitcoin that was still available, he would massively drive up the price. So it works. The manipulation works to the downside as well as to the upside. So people who are worried that, for example, the federal government could come in and just short Bitcoin futures and destroy it that way, they could do that. But what that would do is it would allow us to, I often use the analogy of a beach ball. You can push it underwater, a really big beach ball. You can try to push it underwater, make it stand underwater perhaps for a few seconds. It's going to bounce back to its equilibrium level. And so if a big government like the US government decides to drive down the price of Bitcoin, they could certainly do it over the short term. And what that would allow, it would allow people like you and me to buy Bitcoin to buy real Bitcoin at a really nice low price. So let's actually hope that happens. And the thing about people who short Bitcoin futures, like maybe a big government that doesn't like Bitcoin, any seller of a future has to cover at some point. They are natural buyers. And so there's no free lunch in this. This is a completely non-manipulated market. And the funny thing is, I often get this critique from people who are completely in favor of the current fiat currency system. So what does our current system look like? What do our quote-unquote free markets look like in America? Well, we have circuit breakers. This trading just stops when the market's down a certain percentage that's sort of arbitrarily defined. 5%, 10%, 5% overnight futures, whatever it is at this point. We get circuit breakers. We get, and then we get the biggest thing of all, obviously, is we have a central bank in the U.S., and this is happening elsewhere as well. We have a central bank that just prints new money whenever it wants and uses it to buy things, to prop up private equity groups, to prop up hedge funds, and even to buy the bonds of really junky companies buying junk bonds. So if you want to know a manipulated system, the most manipulated system in the world are the American financial markets, where you have a central bank setting interest rates fairly arbitrarily, printing new money, and using it to buy bond ETFs. This is manipulation. Bitcoin is very, very difficult to manipulate. I would say it's impossible to manipulate. It's decentralized, it's global, and it runs on its own software. There's no extraneous power that can make it go up or down for any extended period of time. Now, I want to conclude by talking about some of the value that Bitcoin does offer. And I would say we'll start with the second one, which is medium of exchange. Bitcoin is obviously very cool because you can, let's say you're escaping from China, you can convert some of your wealth, your yuan, to Bitcoin and use it to come to the US. It's very easy to send money across borders. It's very cheap to send it. If you want to send a few million or a few $1 billion overseas, you don't have to wait days. You don't have to pay SWIFT fees and wire transfer fees. And so that's very cool. The other thing is it's censorship-resistant money. You can send Bitcoin to any political group you want, any religious group you want, and it cannot be censored. So just because someone in Washington D.C. doesn't like who you're sending money to, it still cannot be stopped. Now, obviously, this means it can be used for illegal activities. I certainly don't condone drug dealing or money laundering or anything like this. But we have been entering a period where free speech is under assault in the U.S. And so I think it's important to have censorship-resistant money. Obviously, if you live in a place like Zimbabwe or Venezuela or North Korea, it's even more important to have a form of money that cannot be stopped by your government. So it's a very good medium of exchange. This is one of the functions of money. The other real function, the one I'm most excited about, is it's Bitcoin as a store of value. So one way of thinking about Bitcoin, and I talk about this in other videos that I'll link to, Bitcoin is a lot like digital gold. It's scarce, and it can be used as a hedge against inflation and central bank money printing. If you want to learn more about this, I will link to Plan B. It's at 100 trillion USD on Twitter. This guy is a very smart quant. He's an anonymous account, but he's the real deal. He knows what he's talking about. And I believe it appears he works for a pension fund in the Netherlands. So he works for a big institutional investor, and this is why he has to remain anonymous. But if you just read his material, you can tell that he is a very smart individual who understands mathematics and understands economics as well. So I will link, if you go to his Twitter account, which I'll link to, it will take you to this article, Modeling Bitcoin's Value with Scarcity. And this is really the basis for my Bitcoin hypothesis, why I think it's going to 100,000 in the next 12 to 18 months, going to 300,000 by 2024, and going to 2 or 3 million by 2028. So I'll link to this paper, very interesting paper, that talks about how Bitcoin is like gold or other precious metals, and it uses a stock to flow model to price Bitcoin. This is a very statistically robust way of modeling Bitcoin. And if Plan B is right, and if I'm right, Bitcoin has huge, huge potential returns. Again, I'm not promising you it's going to go up 10% a month. I'm not promising you it's not going to go to zero. It certainly could go to zero. But over the next couple years, if it functions the way it has been functioning, especially against the backdrop of all this central bank money printing, Bitcoin could certainly be trading in the millions. And there's actually no limit to where Bitcoin can go, actually. It can become like, it's like a balloon where you can just fill up. Let's imagine it as an infinitely expandable balloon where you can add as much water to it, and it will be able to take that water. It's not like a stock where it hits certain growth ceilings, or can't go above a certain PE or something like that. As a store of wealth, the amount of wealth that humanity can create going forward. Let's say I create a new vaccine for cancer, a new cure for cancer, a vaccine for the coronavirus, etc. This is creating, or I create the next light bulb and the next iPhone. This is creating wealth for humanity. And that wealth can be stored in fiat currency, and in which case it loses a little bit of money every year and gets debased, or it loses a lot of money every year if you live in Venezuela or Zimbabwe. Or this wealth can be stored in gold, in physical gold. It can be stored in real estate, or it can be stored in Bitcoin. And I would argue that Bitcoin is probably the best place to store it right now. Now, I touched on this earlier, but I just want to touch on it at the end here. There's no reward structure for recruiting new Bitcoiners. Every time one of you guys signs up for Bitcoin, I don't get paid. There's no central group controlling this. Again, it's completely decentralized. And unlike Ponzi scheme products or pyramid scheme products where you're selling, let's say you're selling beauty products or something like this in an MLM scheme where there's basically an infinite supply of beauty products they can make or kits that they can give to you to sell. Bitcoin has a fixed supply. There are only 21 million coins. A million of those were locked up by Satoshi. A ton of them no longer move around. They're just locked up by Bitcoiners like myself in hardware wallets. It's the scarcest asset in the solar system. There are only 21 million total that will ever be made. So it's not infinite supply. You can't just print more of them as you get more customers. And so as such, it's not dependent on more recruits to prop up the price. If Bitcoin stopped growing at this point and the current Bitcoiners just used it, the price maybe would not go up, but also it would still function as a decentralized network. So when you hear Bitcoin, I want you to think network rather than pyramid or Ponzi scheme. And I think some good analogies for this are things like the telephone. So when Alexander Graham Bell invented the telephone, there was just him. Maybe he could call one of his assistants. But the more people who joined the telephone network, who got telephones and hooked them up, the more valuable this became for Ma Bell and AT&T and all the phone companies as this network grew. Very similar to the internet, when there were just a few hobbyists connected to it, didn't have a lot of value. But as all of humanity is in the process of connecting to the internet, it becomes much more valuable. And you can see this at the corporation level as well. eBay, when there were just a few buyers or sellers, didn't have a whole lot of value. But as the network grew, people went to eBay because that's where all the buyers were. People went to eBay because that's all the sellers were. And so eBay benefited from network effects in terms of its growth. And this has really been the model for a lot of Silicon Valley companies, including Facebook. The reason people are on Facebook is because other people are on Facebook, and they did a really good job of using network effects to grow and protect themselves. And so I'll close with one final argument. I often hear people say, well, I could just it's very easy to make cryptocurrencies. I can make my own Bitcoin. And so it doesn't really have value. It's not really scarce. Well, what people who say that miss out on is you can make a similar argument about Facebook. I could hire a developer to just create a new Facebook for me. The software is not that difficult, at least at a very basic level. And so then I could tell everyone, come join my social network. But because we've had these first movers like Facebook and Twitter and Instagram and YouTube and TikTok, etc., it'd be very difficult to start that off, and probably impossible. There's already a Facebook, so we don't need it. Maybe we need an Instagram or something for younger people so they don't have to be on the same network that their parents and grandparents are on. But you can't compete with Facebook by building your own Facebook. And in the same way, you can build your own cryptocurrency. It's probably a lot easier. You can build something and base it on the Ethereum platform, something like that. And you can say, I have all these coins and it's a fixed supply. But what you don't have is you don't have the brand, and you don't have the network effects. You don't have the hash rate power. You don't have the same number of developers. You don't have the high market cap. You don't have all the miners spread around the world, etc. And so Bitcoin benefits from these network effects. It's not a pyramid scheme. It's not a Ponzi scheme, but it's a network. And it benefits from these network effects. And as a result, it also benefits from something called the Lindy effect, which means if you're sort of a digital good or something non-organic, non-perishable, the longer you've been around, the longer you are likely to be around. So for example, Coca-Cola as a company has been around for over 100 years, so it's pretty likely to still be around in 100 years from now. McDonald's has been around for 50, 60 years, whatever it is, et cetera, et cetera. Whereas like a newer tech company, Facebook's been around for, call it 14, 15 years. And so you would expect it to be around for at least another 14 or 15 years. Bitcoin is the oldest cryptocurrency that's still in existence and used by a lot of people. So it really benefits from these network effects. So that's why Bitcoin, I want you to think of it as more of a network rather than a pyramid or Ponzi scheme. And just remember how it's completely decentralized. I think that's the easiest way to debunk this critique. Let me know your questions and comments below. If you have questions about what you'd like me to make my next video about, that'd be great as well. And please hit that subscribe or like button if you found this video useful. And check out my other videos on Bitcoin, which I'll link to below. I would encourage everyone to at least give Bitcoin a chance to read up on it and not dismiss it for very silly reasons, like by saying it's a pyramid scheme or that it can be banned or that it's a tulip bubble, these kind of critiques that don't really hold a lot of water. And I hope to make more YouTube videos answering the critics on these terms. Thanks a lot for listening, and I'll see you in the next video.